Restructuring is bringing results. Our restructuring program has proceeded as planned, and we are taking actions that are significant for company's future success. And net sales on the first half were at the level of previous year, and even though the operating result was still below zero, it improved significantly due to finalization of big loss-making projects at the end of last year. Operating result was still burned by weak margin or even loss-making health and care and school projects and losses from Swedish operations. Our balance sheet and financing position was improved, interest-bearing debt was repaid, and cash reserves 45 million euros at the end of period were on good level. Quite significant amounts were released from net working capital during the period. Sales has proceeded well, and our order backlog at the end of June was about 50 million euros higher than at the year end. And at the end of June we signed a financing agreement with our banks. The agreement is valid until end of 2022. And we are also planning to organize a rights issue with the aim of raising gross funds of approximately 20 to 25 million euros to increase the company's equity and cash assets. We withdrew our financial outlook in April. The reason behind was that the corona pandemic that created great uncertainty in Lehto's business environment and weakened the visibility. Even though the pandemic has not had significant impact on Lehto's business so far, there are still lots of uncertainties. For example, availability of financing for the customers that might slow down the start of new projects and even cancel them. Because of the common financial position in Finland, consumers and private investors are more careful than earlier with their decisions to buy new apartments. On the construction sites, our employees are working very close to each other and with subcontractors too. And regardless of the preventive actions, there might be corona infections that slow down the progress of the projects. Mainly because of these uncertainties, we are not giving guidance for this year. Demand is quite stable, and school investments made by municipalities supported well. We signed new construction contracts worth 99 million euros, and order backlog grew to 260 million euros. As a consequence of the corona pandemic, start of some new projects were delayed, and contract negotiations with some customers were stopped because of the uncertainty. However, progress of the projects started before corona pandemic have progressed without major disturbance. Net sales went up by 11% from previous year. We finalized two projects that are part of German DWS portfolio, and a share of contracting projects significantly increased from previous year. Our focus has moved from our own developed projects to fixed price contracting for institutional customers. We see that the wood construction is a big thing in future. Our Deco wooden apartment house concept was released last year, and it enables 4-story apartment buildings to be done of factory-made room elements. Additionally, it is strongly in line with ecological and domestic aspects. It is worth to mention that our well-performing pipeline renovation business has continued its good progress. During the review period, we finalized 7 pipeline renovation projects, and at the end of the period there were 11 projects ongoing. In Sweden, our focus has been in finalization of ongoing daycare center project that was started a couple of years ago, actually 2 years ago, and we are also starting a new wooden apartment building business. We have developed a concept that is especially targeted for Swedish market and is based on wooden factory-made room elements. Right now we are having negotiations with customers and investors about the pilot project, and we want to progress step by step there. Our aim is to make fixed price projects and to have local subcontracting partners for on-site work. Balance sheet total fell slightly compared with the 2019 closing date. The major change on the balance sheet was the decrease of inventories and interest-bearing debt. This is due to transformation from capital binding own developed projects to more fixed price contracting, and we also repaid our loans. Our liquidity is on a good level. We have seen that availability of financing got more challenging during the review period. This has had some effects on our business too, but right now there are signs of a recovering financing market too. Availability of guarantees also became somewhat more difficult during the period. The coronavirus pandemic has also affected our business. The start of some construction projects have been postponed and housing sales to consumers were slowed down. But it started to recover at the end of second quarter. There have been some coronavirus infections actually on 2 construction sites, but we are not aware of any serious cases. Construction sites have been taking the necessary protection and prevention measures, and work is also continuing on the aforementioned 2 sites. Work is currently progressing in a relatively normal manner, both in offices and on construction sites, in line with the company's guidelines. During the quarantine, we have found some new ways to work and utilize digital solutions. For example, some apartments were virtually shown to the customers, and some housing companies had their general meetings through the remote connections.